Hi, everybody. Welcome to Tax the Rich, Save America. My name is Erica Payne, and I'm the founder and president of the Patriotic Millionaires. I'm joined today by three of our members, Morris Pearl, Chuck Collins, and Stephen Prince. Morris?
My name is Morris Pearl, and I'm the chair of the board of the Patriotic Millionaires. I'm a computer engineer by training, but I spent most of my career on Wall Street, the last 10 years at BlackRock, the largest asset management firm in the world. After the financial crash of 2008, my work centered on figuring out the risk evaluation of banks around the world, from the Bank of England to the Bank of Greece. One day, I was on the top floor of a bank building in downtown Athens, Greece. We were taking a lunch break from a due diligence meeting, and I walked over to the buffet, and then I walked over to the window so people wouldn't see I was having 2 chocolate puddings. And for a minute, I thought I was watching a parade going down the street. And then I realized I was actually seeing a demonstration moving towards the Greek parliament. And while I was watching something between a demonstration and a riot, I finished my pudding, and I turned around and walked back to the buffet. I looked around, and I wondered if I was actually doing any good for the rest of the people of Greece, besides these dozen or 2 bankers I was having lunch with. A few months later, I left a 30-year career on Wall Street. I've been working full-time doing advocacy and policy work at the Patriotic Millionaires since then.
Hi, everyone. My name is Chuck Collins. My great-grandfather was the meatpacker Oscar Mayer. He emigrated from Germany with a recipe for sausage in his pocket and made a fortune. My father used to say bringing home the bacon had a totally different meaning in our family. When I was 26, I inherited a part of that fortune, and I promptly gave it away. Why did I do that? Well, I didn't think it was a good idea to have a society where some people inherited so much wealth and other people had nothing, and I didn't want to be a beneficiary of that system. I've spent the last 30 years researching wealth and inequality. I wrote a book about why we should keep the inheritance tax with Bill Gates Sr., who recently passed away. I currently direct the program on inequality and the common good at the Institute for Policy Studies, and I'm happy to be here.
Every time I hear Chuck talk about giving away all that money, I don't know if I should shake him or hug him or what. I'm Stephen Prince. I grew up in a little town called Waycross, Georgia. My family wasn't rich when I was growing up, and for the first 20 years of my life, before I got the courage to start my own business, a printing company, when I was 42 years old. I put the startup costs on my credit cards. Several years later, my accountant told me, "Stephen, you're broke." In fact, he said, "Everyone in town knows that you're broke, but you." Well, he scared the hell out of me, but I just kept plugging along, and sooner or later, business started to getting better. Today, I print gift cards for everyone from Walmart to Dunkin' Donuts. People join the Patriotic Millionaires because they know our class is getting away with murder. Did you know that CEOs are 4 times more likely to be sociopaths than the general population? That's a true stat. Rich people are mostly just a bunch of greedy bastards. I should know. I'm friends with a lot of them. But God bless them, they've been advantaged for so long that they've forgotten that they put their pants on one leg at a time, just like everyone else. Even the ones who inherited their money are convinced that somehow they earned it. And by God, they're going to fight to keep every last red dime of it. America be damned. Every day, millions of people in this country go to work, do the right thing, pay their taxes, and just try to lead a good life. And every day, they're getting screwed by the richest people in America, and it's time we put a stop to it.
The Patriotic Millionaires first came together in 2010 during the lame duck session of Congress, when President Obama and Republicans in the Senate were negotiating an extension of the Bush tax cuts for incomes over $1 million. Here were 2 allegedly different sides of the political aisle working together to lower taxes on millionaires. Well, that just made me so mad. So I called a couple of millionaires I know, and together we drafted a letter and circulated it. And basically the letter said, "For the good of the country, raise my taxes." The message was so shocking coming from a group of millionaires that it just blew up in the media. And we've been working together to raise taxes on millionaires like them ever since. To be clear, we are not a partisan group, and taxes are not a partisan issue. The majority of Democrats, the majority of Republicans, and the majority of independents all think that millionaires and billionaires should pay higher taxes. The only people who disagree with this incredibly unremarkable idea are the politicians in charge in Washington. Could it possibly have anything to do with all those campaign contributions they get from millionaires? Maybe. During World War II, the top marginal income tax bracket was 94%. Shortly thereafter, it was 90%. Today, it is 37%. Who's in charge in Washington has changed countless times over the last 50 years, but the tax rate for America's richest citizens has gone in one direction, down.
Most tax negotiations take place behind closed doors, and in the end, compromise legislation typically gets bipartisan support. So it's been virtually impossible to know who to blame for where we are today. That changed in 2016, when the Republicans took over the White House, the House of Representatives, and the Senate. They didn't have to compromise at all. In 2017, they used their power to rewrite the entire federal tax code. Every single Democrat voted against the new tax bill. Every single Republican voted for it.
This is actually really lucky because it finally gave us clarity on how at least one side of the political aisle thinks the tax code should be structured. To be clear, some of the BS in the tax code has been around for years, but in 2017, Republicans decided to take full responsibility for it. They voted for it, they should own it. You may like some of it or hate all of it. That's for you to decide. But just want to make clear in talking to your lawmakers about taxes, because regardless of who's in charge, Americans deserve a fair tax code, and we don't have one.
Last year, for the first time in history, billionaires paid a lower tax rate than any other group of people in America. Let's see how that happens by comparing a rich person's taxes to a regular person's taxes.
Say that two people, let's call them Joe and Cammie Workhard, worked full-time last year, 40 hours a week, 52 weeks a year. They made $100,000, just above average for a two-earner couple. They're married and they take the standard deduction. So after paying into Medicare and Social Security, they end up with about $75,200 in taxable income.
Let's step back and explain a couple of things. Here's a chart of the federal tax brackets showing how much you owe at each level of income. Everybody gets a standard deduction, which is basically the amount the government says you need all of that to take care of yourself. You don't pay any taxes until you make above the standard deduction. We have a progressive federal income tax, which means that you pay a slightly higher percentage of your income as you move further and further up the income scale. So after the standard deduction, a couple will pay 10% on the first chunk of their money, 12% on the bit after that, and so on and so forth until they max out at 37% for all of their income over around $620,000. Everyone pays the same rate as they move through the tax brackets, and everyone maxes out at 37%, whether they make $622,000 a year or $622 million.
So back to the Workhards. With $75,200 of income, the Workhards pay 10% of the first chunk of income and 12% of the rest for a total tax bill of around $8,600.
Now say two other people, let's call them Ronald and Melanie Slump, sit around all year tanning on the beach. And one day, Ronald clicks a button on the couple's E-Trade account and sells some stock, making a profit of $100,000. The Slumps would take the standard deduction and be left with $75,200 of workable taxable income, just like Workhards. They made the same amount of money, so the Slump should pay around the same amount in taxes as the Workhards, right?
Wrong. Under our current tax system, the Slumps will pay zero in taxes on that $100,000. The Workhards worked hard all year, while the Slumps sat around the beach drinking strawberry daiquiris. At the end of the year, the Workhards were nearly $9,000 poorer than the Slumps. Why does this happen?
I'll tell you why. It's because the Republican lawmakers who wrote the tax code believe that money should be taxed differently depending on how you made it. Here's a comparison with the rates side by side. Like the work cards, most of you on this call make ordinary income. You go to work, you get a paycheck, and taxes come out of that paycheck. Other people, and this is mostly millionaires, make capital gains income. You buy an asset like a stock, it goes up, you sell it, that profit is considered a capital gain. As you can see, capital gains income is taxed at a much lower rate than ordinary income.
Let's look at another example. Let's say the slump sold even more stock and made $400,000 in capital gains income. They take the standard deduction, and then they'll pay 0% tax on the first $80,000 or so, and 15% on the rest of their taxable income, for a total tax bill of around $44,000. The workhards also had a good year. They made a total of $400,000 too, working 40 hours a week, 50 weeks a year. They take the standard deduction and they pay into Social Security and Medicare. At the end of the year, their total tax bill is around $82,000. Again, two families make exactly the same amount of money, but the cocktail sipping, super tanning E-traders end the year $38,000 richer than the working people.
So if you actually work for a living, you pay higher taxes than people who live off investments. But that's not the best deal in the new federal tax code. The best deal is to inherit money, like I did.
Let's say the workhards got new jobs, working full-time for America Sings. And they're such good singers that America Sings paid them $11 million for the year. They paid Social Security and Medicare, used the standard deduction. At the end of the year, they just under $11 million in taxable income. They paid 10% on the first chunk, 12% on the next chunk, and so on and so forth, maxing out at 37% on all the income above $622,000. The workhards' total tax bill for the year was around $4 million. Making $11 million a year is hardly reason to sing Cry Me a River, but how does the workhards tax bill compare with the slumps tax bill?
Well, the Slumps also had a very good year. Mr. Slump's great aunt died and left them $11 million. Don't worry, they weren't close. So how much taxes will the Slumps pay on their $11 million worth of inheritance income?
Zero. Nothing. Neither the aunt's estate or the Slumps will pay any taxes on that $11 million, because when Republican lawmakers rewrote the federal tax code, they exempted the first $11 million of every estate from taxes, $22 million for a couple. Once again, the workhards and the Slumps took in exactly the same amount of pre-tax income, but because they earned their money in different ways, one couple by working and the other waiting for someone to die, the Slumps ended the year $4 million richer than the workhards.
You may have thought we broke from England and started our own country because we wanted things to be different here in the United States. But take a deep dive in our tax code and you'll hear "God Save the Queen" playing in the background.
That's right, Stephen. The Republican lawmakers who rewrote our tax code clearly preferred an aristocracy. Want proof? Remember how capital gains taxes work? You buy stock for $1 million, you sell it for $10 million, you only pay taxes on the $9 million of profit you make. But what if you bought that stock for $1 million, it went up to $10 million, and the day before you're going to sell it, you died, and the stock went to your heirs? In the new federal tax code, when your heirs inherit the stock, poof, the basic magically changes. Instead of the basis being $1 million, the value of the stock when you bought it, the basis magically changes to $10 million, the value of the stock on the day that you died. Instead of the basis being $1 million, the amount that you paid for the stock when you bought it, the basis is stepped up to $10 million, the value of the stock on the day that you died. When your heirs sell that stock, they will only pay taxes on any gains above that new $10 million basis. $9 million of capital gains is just wiped away for tax purposes.
Another gimmick, called the 1031 exchange, deserves extra attention as it benefits a certain well-known real estate developer. The new code allows investors to avoid capital gains taxes when they sell a piece of property. if they immediately invested in another property. Let's say a developer buys a building worth $10 million, holds it for a few years, and then sells it for $20 million. He rolls that money into a new $20 million building. A few years later, he sells that building for $60 million and buys 1,000 buildings worth $60 million. The developer started off with one $10 million building and ends up with 1,000 buildings worth $60 million and has still paid no taxes.
When these two loopholes work together, millionaire real estate families can acquire billions of dollars worth of property without ever paying a cent in taxes. Let's look at the same situation as before, but instead of selling all those buildings, the real estate developer holds on to them until they're worth $200 million. And then he dies. His estate will pay some estate tax, but his heirs will inherit all that property at a new basis. If they sell it before it gains any more value, they will pay no taxes on all those gains.
Let's just think about that. On one side is a wealthy heir who's never worked, never contributed anything to society, who inherits hundreds of millions of dollars worth of property and gives nothing to help keep the country running. Nothing to build our roads, nothing to keep our water clean, nothing to keep us safe. On the other side are people like the workhards. They work hard, pay their taxes, and do their part for the country every single day.
Between a third and a half of all of the rich people in America inherited their money. Many of the richest people in America are not rich because they did something to earn their money. They're rich because their parents or their grandparents or their grandparents' parents did something to earn that money. There's nothing wrong with inheriting money, of course, though. But there's no good reason why people who get their income from inheriting it should pay tax at a lower rate than people who get their money from working.
So we've talked a little bit about personal taxes. Let's turn now to corporations.
In 2018, if you ordered a box of toothpicks from Amazon, you paid more in taxes than Amazon paid in a whole year. If you watched a single movie on Netflix, you paid more for your subscription from Netflix than Netflix paid in federal taxes for all of 2018. If you filled your car up once, you paid more than Chevron paid in federal taxes in 2018. Morris, can you explain how this happens?
There are a lot of ways, but one of the main ones is the new United States federal tax code lets companies pretend they make their money someplace different from where they actually make their money. Let's say a company like Starbucks, for example. Starbucks has a few thousand stores in the United States where they sell lots of coffee, and a few dozen stores in Ireland where they sell less coffee. You would think they would pay lots of taxes in the United States and less taxes in Ireland. But that's not how it works. Most large companies have what's called intellectual property. Intellectual property is something like patents or a trademark. Unlike land or buildings, intellectual property can be moved from one country to another as fast as you can click send on an email. Picture the Starbucks logo. A smart lawyer can transfer ownership of that logo from Starbucks in the United States to Starbucks of Ireland. Then Starbucks of Ireland would legally own that logo, and Starbucks in the United States would send money to Ireland every time they use it. The company can make the royalty payments whatever they want. If they make the royalty payments big enough, Starbucks show all of its profit in Ireland, even though it sold exponentially more coffee in the United States. Using this and other tricks, 91 of the Fortune 500 companies paid zero taxes in 2018. Zero. So here we are again with the workhards holding up their end of the bargain and everyone else shirking their responsibilities.
The new Republican tax code lets some corporations pay only 10.5% on the money they earn overseas. That's half the current corporate tax rate of 21%. And companies can also get a big tax cut for all the factories and equipment they own in other countries. The more factories a company earns overseas, the more it can cut out of its American tax bill. No wonder we're losing so many Americans.
Now, rich people and CEOs love pretending there are good reasons why they should get to skip out on taxes. One of their favorite reasons is that they are job creators. Woohoo! Job creators. like they're little magicians who create jobs out of thin air just by waving a little wand. Look, I'm a business guy, and I've got news for you. I'm not a job creator. Sure, business people like me start companies and we hire employees, but my employees don't have jobs because of my benevolence or my genius. They have jobs because American people really like to buy gift cards. People will have jobs making gift cards even if I die, because if people really want gift cards, another entrepreneur will come along and organize a company to fill that demand.
In the lead up to the Republican rewrite of the federal tax code, there were a lot of CEOs pushing for lower federal taxes. They claimed that lower corporate taxes would allow them to create more jobs. They even launched a big job creators bus tour, went all over the country. The CEO of AT&T, Randall Stephenson, was one of the biggest cheerleaders for the corporate tax cuts. He was on TV constantly, claiming the correlation between lower taxes and jobs was very, very tight.
It's a big deal for job creation.
And he was promising that corporations hire tons of people if only they weren't burdened with corporate taxes. Now, keep in mind, corporations only pay taxes on their profits. Profits are calculated after expenses like paying people is deducted. So Mr. Stevenson's claim doesn't even make sense on its face. But be that as it may, maybe he was just confused. Maybe he really did think that he would hire more people if only the corporate taxes were lower.
I don't really think so. You see, between 2008 and 2015, AT&T paid an effective corporate tax rate of 8%, well below the statutory rate at the time of 35%. So you would think with such low taxes, the company must have hired tons of people. At least that's what Randall Stephenson said. Nope. During that period, the company actually cut 80,000 jobs. And with their low taxes and the savings from the layoff, the company bought back $34 billion worth of AT&T stock, making executives like Randall Stephenson even richer. Since the tax code went into effect, AT&T has laid off an additional 40,000 people. And last year, they paid Randall Stephenson $32 million.
Erica just mentioned stock buybacks. For those of you unfamiliar with the term, a stock buyback is when a company uses some of its profits to buy up its own stock, making the remaining stock more valuable. That doesn't change the company's long-term financial health or create jobs, but it does make people who are paid in stock options, like millionaire CEOs, a lot of money. In 2017, a lot of CEOs said they would use their corporate tax cuts to hire more people, but that mostly wasn't true. Instead, many of them used their tax cut to buy back stock and make their executives even richer. The year after the rewrite of the federal tax code, corporate stock buybacks reached an all-time high of around $1 trillion.
So business owners like Stephen don't create jobs. Corporate tax cuts don't create jobs. And stock buybacks really don't create jobs. But what about just regular investors? People like me with money in the stock market. We pay half the tax rate of people who actually work for a living. Lawmakers justify that lower tax rate by saying that investors are job creators. And if we raise their tax rates, they won't invest. So, are investors in the stock market job creators? No. But let me explain. Apple employs thousands of people who make computers and iPhones. I'm an investor in Apple. I have hundreds of thousands of dollars in Apple stock. The people who work at Apple have jobs because of the millions of people who want to buy computers and iPhones, not because of investors like me. None of the money I spent buying Apple stock even went to Apple. It went to other investors who happened to be selling their shares that day. And to be clear, investors are not going anywhere, regardless of their tax rate. The alternative to investing is sticking your money under your mattress somewhere. And the last I checked, mattresses do not pay very high returns. Any logical person would rather make something and pay taxes on it rather than pay no taxes because they don't make any profit at all.
All right, so let's leave regular stock market investors aside for the moment, though, and focus on private equity. Private equity funds actively buy and sell whole companies. Their investors get the special investor tax rate, And even the people who work managing the fund, who have none of their own money at risk, they also get the special tax rate. Morris, are they job creators?
Not even close. Here's an example. In 2004, private equity managers took over Toys R Us. They love to say they saved the company and created 62,000 jobs. Did they? Well, prior to the private equity takeover, Toys R Us had its peak over 97,000 employees. The company was in good financial shape, with profits of over $252 million and cash on hand over $2 billion. By the time they were done to the company, these job creators had shut down all 735 US stores and loaded its once positive balance sheet with over $8 billion in debt. The investors made $470 million, destroyed a viable company, and cost nearly 100,000 people their jobs. And they paid half the tax rate on that money as people who actually work for a living.
So the new federal tax code makes it easy for corporations to skip out on taxes. It gives advantages to people who already have money or inherit money over people who work for a living. And as you get richer and richer, there are more ways to get out of paying your fair share of taxes. Have I got that right, Morris?
Yes. And the result of all that is that our country is more unequal now than it has been in 100 years. The top 1% own 40% of all the wealth in this country. Since 1990, their wealth has tripled. The bottom half of our citizens have seen no wealth growth at all.
It's like some sick game of economic Jenga, where we just keep on taking money from the people at the bottom and in the middle and giving it to the people at the very top. And it's destabilizing our whole country.
Today, people are taking to the streets. They may have different reasons for protesting, but on the whole, our people just cannot take it anymore. They are sick of seeing a few ridiculously rich people get everything, while millions of people are being treated as second or third class citizens. Regular people who work for a living pay twice the tax rate that I pay. So even if you make the same amount of money, you end every year worse and worse off.
In America today, deaths of despair, deaths from alcohol, suicide, and drugs are at their highest level ever recorded. 2.5 million people are addicted to opioids. And for the first time in our history, life expectancy is going down for segments of the population. With COVID, things have only gotten worse. Millions of people are unemployed, businesses across the country are going under, many permanently. But to look at the stock market, you wouldn't know how bad things are going for many people. And here's a troubling fact. Since the middle of March 2020, over 450,000 people have lost their lives. But the wealth of US billionaires has increased more than $1 trillion.
So none of this just happened. Over time, in a variety of ways, a relatively small group of people manipulated the tax code and with it the economy to make sure that the economy delivered results that were great for them and pretty terrible for everybody else. These people actually want to live in a country with a tiny number of extremely rich people, humongous numbers of poor people, and basically no middle class. I don't understand why someone would want to live in that kind of country, but you can't escape from the results of what they've done by the way they structured the tax code. We can fix all this with your help. If the American people are really paying attention, they can have the kind of tax code they want regardless of who's in charge. And again, if you want to know more or join the fight to unrig the economy, fix the tax code, and save America, please visit taxtherich.com. Thank you.